Imagine a world where, as you sleep, something out there is tirelessly scanning global markets, sniffing out tiny price discrepancies and placing perfectly timed trades. No breaks, no emotions, no second guessing, just pure data-driven precision. This isn't science fiction anymore. It's the story of AI bots, invisible traders that are already making some people quietly rich in stocks and crypto. The real question is, are you in on this revolution, or are you still playing the old game? The birth of automated trading, a look back. To truly understand this seismic shift, let's go back a few decades. In the 1980s, quantitative trading began its march onto Wall Street. Firms like Renaissance Technologies and D.E. Shaw started experimenting with computer-driven models, but they were a far cry from what we have today. Back then, it was about simple math, taking historical price data and finding statistical edges. But these early efforts laid the foundation for the next chapter. As computing power grew and data became more abundant, trading became faster, smarter, and more automated. By the 2000s, high-frequency trading firms were executing thousands of trades per second, using algorithms that could sniff out tiny market inefficiencies, often for mere fractions of a cent. It was all about speed, but still, these algorithms were rigid, following strict rules set by human programmers. Then came the AI revolution. Deep learning, natural language processing, and reinforcement learning changed everything. Instead of telling a computer what to do, we started teaching it how to learn. Suddenly, bots weren't just following rules. They were evolving, adapting, and even anticipating market movements in real time. How today's AI bots are built, the secret ingredient. At the heart of these modern AI trading bots is data. Unimaginable amounts of data. Every tick of every price on every exchange. Breaking news stories, tweets from influential traders, global economic indicators, even Google search trends. AI bots take all this information, feed it into complex neural networks, and build predictive models that can make buy and sell decisions in milliseconds. But it's not just about speed, it's about context. These bots can understand sentiment, parsing the mood of the market by analyzing thousands of tweets and Reddit posts in real time. They can spot hidden correlations, like how a spike in crude oil might ripple into airline stocks, or how a regulatory shift in Europe could impact crypto markets. And most importantly, they can learn from their mistakes, constantly refining their models to get better with every trade. Real stories of AI-powered wealth, the everyday millionaire. Consider the story of Ethan, a freelance graphic designer from New Zealand. For years, he tried to beat the markets on his own, with mixed results. But in 2023, he signed up for a trading platform that used a GPT-powered AI bot called TradeGPT. With a modest deposit, he let the bot run trades in the background while he focused on his art. Within 6 months, he'd grown his initial investment by 60%, enough to start planning for a home he never thought he could afford. Then there's Kyra, a retiree from Canada who decided to dip her toes into the crypto markets. She used a bot called CryptoSage, a service that promised to monitor crypto volatility and execute trades she didn't have the stomach for. While most of her friends were cautious about crypto's wild swings, Kyra's AI quietly rode the waves, turning her retirement fund into a cushion that could last a lifetime. These aren't isolated stories. Across the world, small investors are using AI bots to turn market volatility into opportunity, often without ever setting foot in a Wall Street office. The democratization of AI? Why now? What's truly remarkable is how these powerful tools, once locked behind the doors of billion-dollar hedge funds, are now accessible to ordinary people. Platforms like Pionex, 3Commas, and Krill offer ready-made AI bots that can execute complex strategies with just a few clicks. Some of them even allow you to customize your bot's behavior, setting your own risk limits and goals. It's a quiet revolution, and it's leveling the playing field. In the past, you needed a team of quants and a supercomputer to access this kind of trading firepower. Now, you need nothing more than a smartphone and a willingness to learn. The quiet arms race, hedge funds versus DIY traders. Of course, the big players haven't stopped innovating. Hedge funds are constantly refining their AI models, hiring the brightest minds in math, physics, and computer science to gain the tiniest edges. They're using satellite imagery to track shipping routes, analyzing foot traffic in malls, and even scraping job postings to predict economic trends. But the fascinating twist is that some of this innovation trickles down to retail investors. Many of the open-source AI models used in bots today are inspired by techniques pioneered by hedge funds. The same machine learning algorithms that help a $10 billion fund might also be powering the bot in your trading app. The playing field isn't perfectly level, but it's closer than it's ever been. The risks and the reality. No magic wand yet. For all their promise, AI bots aren't a silver bullet. Markets can be unpredictable, and black swan events can confound even the smartest algorithms. Remember March 2020? The COVID-19 panic sent shockwaves through the markets, and even the most sophisticated bots had trouble keeping up with the sudden chaos. AI bots also have their limits. They're only as good as the data they're trained on, and if the world changes in a way they didn't anticipate, their predictions can fall apart. That's why the most successful traders don't blindly trust their bots. They watch, they tweak, and they adapt. The human touch, where AI meets judgment. Because at the end of the day, AI is a tool, not a replacement for human insight. The most profitable investors are the ones who treat their bots as partners, not substitutes. They use the bot to handle the data overload, to execute trades with perfect discipline, to stay awake when they can't. But they also bring their own judgment to the table, their knowledge of market psychology, their gut instincts, and their ability to see beyond the data. This partnership is the real magic. The bot provides the horsepower, but the human sets the destination. And in a world of constant change, that balance between cold data and warm intuition might just be the secret to long-term wealth. Looking ahead, a future shaped by AI. So what does the future hold? One thing's clear. AI bots aren't going away. If anything, they're going to get smarter, faster, and more sophisticated. Already, new AI models can parse not just numbers but entire narratives, reading news reports and CEO interviews, and incorporating that nuance into their trading decisions. For you, the choice is simple: adapt or be left behind. Will you watch as these bots quietly make other people rich? Or will you find your own way to ride this wave? Will you let fear hold you back? Or will you take the time to learn, experiment, and seize this moment? Because while the bots are already out there, trading 24/7, the real question is whether you're ready to join them, to become part of the new generation of investors who aren't just keeping up with the markets, but leading the charge into a future shaped by data, intelligence, and relentless curiosity. The quiet revolution is here. The bots are awake. The markets never sleep. The only question left is whether you're going to let them make someone else rich, or whether you'll make them work for you.